So today I want to talk about SPACs again, or special purpose acquisition vehicles. I do have other videos out there that you can check out that are related to these topics by following these links right here. It seems as if SPACs have lost a bit of their allure. I want to think about why that might be the case. As a refresher, SPACs are also referred to as blank check companies. You give them money and they are supposed to find a company to acquire. It's seen as an alternative to the traditional IPO market. However, they don't seem to be the best investments. On average, the SPACs underperform even treasuries, and even in the best case scenarios, seem to underperform the average traditional IPO. There's also some structural issues associated with these that really put the average investor in the backseat compared to other investors in this particular structure. You can watch a video that details that much more by following this link here. Also, given the fact that they're blank checks, you give them this money, then they have to figure out what to do with it, right? They have to find a company to purchase. You can see this timeline here that the number of SPACs has exploded, but doesn't necessarily mean the opportunities to buy companies out there have. So all these companies could potentially be scrambling to actually use this money to buy something. In fact, we can see here that this is going to be a big thing in a couple of years when all of these mandated time periods typically have 2 years to invest this money. When all of a sudden, hey, we've got all this money and all this comes due, there's a potential here to lose a significant amount of money as an investor or whatnot. Now, also in the news, we're seeing that the SEC is kind of coming and stepping into play here, saying, there's some things here that aren't quite up and up. We were trying to give you a vehicle where you could go through and IPO a company in a non-traditional way that would allow you to skirt some of the regulations, but maybe that isn't going to be good for investors. So expect there to be some more regulations, additional regulations associated with these SPACs. Also, the performance as of late has not been particularly good. Companies that actually did it through a SPAC have underperformed or had some issues there, and companies that have not gone through any channel whatsoever are really kind of not going the SPAC route. They're being a little bit concerned in that regard. And they have other options, right? They have venture capital, private equity. They can do a traditional IPO, or they could basically do nothing and just kind of keep going as they are. And companies, these young startups, are going down this route and kind of ignoring SPACs. You'll see news stories where they're being inundated with emails and presentations by SPAC companies, but they're not as interested, further exacerbating that problem we talked about before, where there's a deadline for them to invest this money or to acquire a firm. Finally, we'll see that even on the investment bank side, that the revenues associated with these have really dropped dramatically. So we saw certainly in 2020, lots of revenues there, and first quarter 2021. But if you look at second quarter here of 2021, that these revenues have really dropped off. So even investment banks are kind of souring to the idea here. Hope you enjoyed that. Whether or not you invest in a SPAC, happy trading. Thank you so much. I'm Brian Kozlowski.